Alright, MegaWhale team, welcome back to our channel. Thanks for tuning into today's video. We have a very interesting chart to take a look at today, because Bitcoin has been moving quite sporadically within this tight consolidation, and as expected, guys, we're above 23,800. We're above a major resistance zone. We're above that massive blocking zone, that trigger zone that we can see on the daily chart. If we go ahead and zoom out, which is this gray box over here, you can see we found a lot of resistance earlier on, and we're currently retesting. So we're in a period of significant uncertainty for the market, and I feel like a lot of people are still playing sides. They're still playing sides of being a bull. They're still playing sides of being a bear. And this side mentality, this bull versus bear mentality, will only harm your own trading. It's very, very important that you let go of being a bull or you let go of being a bear, and you simply just trade the trend. Okay, if you're going to be a bull and you're going to be a bear, you're always going to have some sort of degree of bias, and that bias is always going to blind you, and you're going to end up being some kind of rage monster who attacks innocent people on Twitter for having different opinions. Okay, so let's go ahead and talk about everything. We're going to talk about the macro to start off with. We're going to talk about the recession, talk about the all the economic information. We'll go over that briefly. Then we'll come down and talk about the short-term price action and talk about possible directions and what we believe is going to happen, and obviously support that with our technical data. So before we get into anything, head down to the pinned comment, join our Telegram channel and get access to our crypto channel over here. Post a variety of different market updates, charts, all our videos are in here. If you're interested in joining our VIP channel, you can have a look at our results through our pinned messages. All our results are posted for a month from February 2021 until July. Currently, we've never had a negative month. If you want to join that, we have a 20% off discount at the moment. You can go ahead and contact me to join. And if you do join our Telegram channel, our VIP channel, you get access to a lot of range of different things, and you can find all the information in the information message when I contact you back. Let's go ahead and talk about what is happening. And we're going to start with the macro chart. Okay, so there's a few different triggers we need to confirm the bottom. And I think really important, we need to identify how trends work and how the price actually moves in a market, more or less when it comes to analysis and technicals, the probability behind movements. Now, just because we close a weekly above the 200 and we close a daily over 23,800, those are our two key prices, okay, to confirm the bottom. So weekly over 200 and daily over 23,800, those are our confirmations at the bottom end. Just because that occurs, it doesn't mean a downside move is never going to happen, okay? Very important you understand that, okay? What it means is if those two triggers occur, the probability that we do continue downwards significantly decreases, okay? So it alters the risk reward, it alters the chances of a move down, and it's much higher degree that we head upwards. That is how it works. There is never ever a scenario where there's 100% certainty a price will not move down or only move up, okay? Or move down, move up, whatever it is. And that is why it's really important you learn to drop the verse bias. The verse bias is that you're either a bull or you're a bear. You're a bear versus the bulls, and you're a bull versus the bears. And you're kind of taking dominance to one side, you're sticking to one narrative, and you're holding on to that narrative. If you act as a bull or a bear, and you are what you would call a perma bull or perma bear, you're aligning your bias with one of those directions. The moment you do that, you're emotional trading, and you're going to be late to moves, or you're going to entirely miss moves altogether, okay? There was a lot of perma bears down over here that completely ignored the significance of the information I was telling you. Even people watching this channel, watching me for months, they agreed with me all the way down. And the moment we got here, they disagreed with me, all right? And I'm not saying agree with me 24/7, because I'm not always going to be right. But I don't base my opinions off fluff. It's all data. So if you disagree with me, you disagree with the data, and that's fine. Sometimes the data's not right. But what I'm trying to say is, perma bears were expecting the price to go lower, and it didn't. It went up, okay? Perma bulls were expecting the price to go up this entire way down, and it didn't. It went down. And that is why it's important that you do not align yourself with a bull, and you don't align yourself with being a bear. You simply trade the trend. I don't care if it's bullish, I don't care if it's bearish, I actually don't care what happens to the price. I don't care if we crash to $10,000, I don't care if we go up to $100,000, because I know as a trader, I can capitalize on any movement. but a lot of people out there cannot do that. They align themselves with a certain direction, but they only can make profit in a singular direction. Whether they're shorting or longing, they hope to just take long positions or short positions and ride that trend, okay? And the trend is your friend until it ends, of course, and it has ended for the most part on the way down. We haven't got confirmation, but it's looking like that. And a lot of bears now are starting to get the same way as a lot of bulls got at the top. I don't know if you guys remember about the top, even over here, you know, I had a lot of people abuse me, you know, it's crazy abuse, you know, death threats, sending me hate messages on Twitter. I had to block a lot of people because I said we're going to go down, and these are all perma bulls. And the same thing's happening over here. People trying to call me out on Twitter, calling me clowns, whatever. Big accounts, you know, Coach Crypto, 100,000 followers, telling me I was a clown when I said 18K was potentially the bottom. And now we're heading back up and there's people in denial. So that is exactly why you shouldn't align yourself with being a bull or a bear. So let's talk about this. So Bitcoin has moved up a lot. We've talked about this already, but our trigger points are 23,800. We need a daily candle close above 23,800. We're not talking about a close. We're talking about an open and that close. So we didn't quite get it because we closed this candle over here under 23 and this candle started much lower. We'd need a candle to open and close above 23,800, and hopefully that happens within the next 24 hours. Okay. Moving on from there, we have our 200-day moving average or 200 SMA, which we'll need to close a weekly above. And then that would give us the momentum or the confirmation that, in fact, you know, the probability that we do rise over here is quite significant in comparison to the probability that we decrease in value from here. So talking about the short-term direction, guys, we do have our VPVR over here. It does indicate that we could see a significant move upwards from here all the way up to about $26,000, $27,000, $28,000 if we do push past this level. So let's take a look at, I think it was this chart over here. A lot of my charts got deleted. This is a chart over here. So a lot of people right now are still also a little bit confused of what it means to be short-term bullish, mid-term bullish, macro bullish, and being in a bull market. And just because we're short-term bullish, it doesn't mean we're in a bull market. Just because we're short-term bullish, it doesn't mean we're macro bullish. Technically, guys, speaking from a macro point of view, we haven't actually flipped this entire downtrend. So this is our downtrend, this is our bear market downtrend, okay? We only flip the bear market downtrend once we break this diagonal downtrending resistance zone. So this zone over here, okay? We got rejected from the zone in 48K. A lot of people are overly bullish here. Like I said, people get massively bullish at resistance and massively bearish at support, okay? We came back down, we retested that support zone. See, this diagonal support zone down over here. We retested it. Guess what? People are massively bearish over here. People are massively bullish over here. People are confused in the middle. The same thing is happening. It happens over and over and over and over again. It is so predictable. If you've been in the market for many, many years, you'll be able to see this stuff coming from a mile away. The way people's psychology and opinions and bias change at these massive points of resistance and support, it is obvious, it is almost comical. So take a step backward, zoom out, look for what it is. So if we do push past 23,800 on the daily, we will most likely see a move up into this range, okay? Now this is a very important range because if we break through this range, that would confirm we have a macro trend reversal, okay? Now, the macro trend reversal doesn't occur at the bottom. The bottom is the lowest price that it reaches, and the macro trend reversal is the price of which the macro trend breaks. Two different things. A bull market reversal would occur above $48,000. Okay, we've had this line in for months. We've been telling you guys, you know, for so long, 48K. 48K is when the bull market will trigger again. We break 48K, there's a good chance we head to a new all-time high, meaning we go over $69,000 and however high. It doesn't matter, I'm not going to talk about that. We just go upwards, okay? So that is kind of our stance on the macro. Let's go ahead and talk about the short-term time frame and kind of discuss, you know, what's happening, because a lot is happening on the short term. And on the short term, guys, we do have, you know, this sideways consolidation above our major support, which is 23,800. And I went ahead and I drew in this small channel on the small time frame on this chart over here to just represent, you know, what we're currently seeing. And we can see a lot of rapid moves on the small time frame. Like, look at these candles, guys, and no wonder people are confused and scared right now, and rightfully so. been a lot of like scam wicks up, a lot of scam wicks down, a lot of like large wicks, there's a lot of large wicks, really grabbing liquidity on both ends, and it just adds to the uncertainty. And it really does, candles explain market psychology. They show you what people are thinking. And all these candles over here, this whole area is really just screaming market uncertainty. It's really screaming that, neither the bulls are confident and the bears are confident. There's a lot of market uncertainty, and that is, a combination of both the situation of where we are in terms of price on the chart. We are literally right on that, or just above that major trigger point for a short-term rally, and the fact that we have this economic news that came out to be negative. Obviously GDP was down, CPI was 0.75, which is perceived to be bullish, but it's actually bad. And a lot of people are uncertain because they're thinking, all this bad news, yet the market went up. How can this actually work? And we talked a little bit about that because if we go ahead and look at, I think it's this chart over here. This is the one over here. We look at what drives a market. And what moves a market is systematic risk. And we have two types of systematic risk, or should I say two components that kind of bring systematic risk together. And we have actual risk, so the actual systematic risk, and then we have the perceived systematic risk. And they kind of work hand in hand together to formulate this actual systematic risk of an increase or decrease in systematic risk. But at the moment, we have a scenario where the actual systematic risk has increased. So remember, we're in a recession now, apparently, according to the data, and I believe we've been in a recession for much longer, but anyway, that's a story for another time. And, the CPI came out bad, we've had 9.1% inflation, and on top of that, we had a 0.75% basis point rise. So the actual systematic risk has increased in the market, yet the perceived systematic risk has decreased, meaning that people are perceiving what has happened to some extent a bullish thing for the market. So willing to move their money out of cash into the markets to try to prevent, whether it's to prevent losses as we are now in a recession, they think a market might be a safe haven, or the fact that they believe the 0.75% basis point hike was priced in and wasn't as bad as expected, and therefore money is moving back into the market. So it's a combination of those, but there's massive discrepancies between the two because systematic risk has actually increased, but perceived systematic risk has decreased, and therefore we've got this scenario where the price is very volatile, and we've had this almost unpredictable reaction to negative news. And I think that has caught a lot of people off guard, including myself. I didn't see that coming. I don't think anyone really saw that coming. I feel like this has been quite a random move, and particularly, the last recent, 48 hours of price action has really shown that. It's showing that in the price. It's showing people are unsure. It's showing confusion, and it's just definitely showing a lot of uncertainty in the market. And during these periods, you shouldn't trade the range. And I've been saying this again and again. If you're uncertain, just wait for the direction to make itself clear and then trade. If you're trying to trade this range, just look at the mess of it. Do you really think this is a good range to trade? This is a horrible range to trade. I've made a few good trades in here, but it's more and more, it is not a very ideal range to trade if you are a new investor, because look at these wicks down. We're losing these resistances, we're pumping back up. The next candle, we're almost fully engulfing over and over and over. It's insane. It really is insane. Wait for the direction and then make a move. So let's talk about the short term. What would constitute a move downwards? So we're going to go ahead and zoom out. So on the let's go 4-hour chart to start with. So the 4-hour chart is looking, again, it is looking uncertain. Now I'd be moving more towards the fact that I would say we're more bearish than bullish on the short term, just because until we reclaim, or should I say, until we break over this major resistance, it is still a resistance, and therefore it should be treated as a resistance. So if we can reclaim that resistance and push over it, then again, I am short-term bullish. I am macro more bullish because we have had a significant bounce from 18K. Okay, we've bounced, like I said, I've been bullish from the bottom over here, and we've bounced, 33% upwards. So even if we come down to $20,000, I'm still up a significant amount on my investment. I don't even care. Okay, and I think it's very important to understand that timing is everything in the market. Someone who said, they're bullish here in comparison to someone who said they're bullish here, it's a very different scenario. It's a very different story, because you're susceptible to, losses at that point, but you're not too far off. So I'm just getting a mobile call. I'm going to have to I'll call him back after. But yeah, so moving back to the channel, moving back to the video over here, guys. The best thing to do in a short term is wait for that break. Again, daily close of 23,800 doesn't confirm anything. It just means the probability of a move upward is significantly higher than what it is right now, okay? That is what it means. And when it comes to making long-term predictions, and when it comes to taking trades, if you're waiting for the perfect moment to enter, meaning you're waiting for a moment where there's zero risk, you're never going to be making an entry because there's never zero risk. There is always risk in the market. There's always going to be a degree of risk that you have to take when you're trading. The decision you should be making is, when is the risk the lowest? When is the probability that the price will be rising in comparison to falling the lowest, so I can look for long-term entries, or I can look for spot positions or long positions, and vice versa if you're looking for short positions. That is all it is, okay? Right now, the market is uncertain. Right now, the candles are suggesting uncertainty. Right now, the economic data is not lining up with the price action. This is not the time you should be looking to aggressively enter, okay? The aggressive, or should I say the long entries or the positions, should have been taken when we were telling you guys all the way down over here, this is where you should have been entering. Right now is a time to be sitting on the sidelines and waiting to see what the hell happens before you make a move, okay? If you're looking to enter now, you have to accept the fact that you probably will get burned because it really is uncertain, okay? I think that is about it for today's video. I do want to run through some of the technicals before we end up. So we're going to go back to this chart and go to the larger time frame and just look at see what the technicals are saying. So let's bring up the RSI. Okay, so let's go to a larger time frame. Let's delete these. Let's go to the 7-day and see what's happening. So on the RSI, of course, we did have an entry signal on the RSI on the 7-day down over here. So upon the break, when we have the price break the bottom, so the 30 on the RSI, and push back above, once it pushes back above the 30, that is your entry signal on the RSI, and we have confirmation of the momentum upon that 9 moving day average cross. So RSI is looking okay. We still do have this macro downtrend on the RSI, of course, and that was our fake out point at $48,000. If we zoom in again, we can see that was our fake out point at $48,000. Sorry, our fake out point at 69,000. So that was what would people say, but at the highest price Bitcoin went, but it was a false top, meaning the top was actually back here in April. This is a false top. It wasn't the market top. The market, according to this chart, actually topped out over here. This was the blow off top for the market. This was the rejection point that we saw on 2 or 3 other occasions. Okay, so taking a look at the RSI again, breaking this downward trending resistance in combination with breaking this RSI trend line will have that positive momentum and most likely send us upwards. Okay, so we're looking for that breakout there on the macro. Let's take a look at the Gaussian channel. So we're going to go to a smaller time frame for this one. Let's go to the 3-day to start with, and not much is happening on the 3-day. Let's go down to the 1-day. Really want to see what's happening. So here's a pretty interesting thing. We are pushing into the Gaussian channel. Now, we already know that when we push into the Gaussian channel, there's a very high chance we usually push through it. And what I mean by that is when we push into it, we usually push through it. All right, when we push into it, we usually push through it. And I can go back in time and show you 100 other examples of that occurring. For example, over here again, when we push into the Gaussian channel, we push through it, and again, okay, and again over here. So what we're seeing is a common trend with the Gaussian channel. When we push into it, we push through it, and usually the most common point of rejection on the Gaussian channel is either the midline or the top level of the Gaussian channel. Now the midline is sitting under us at about 23,400, and I'm pretty sure that is actually sitting at or around that 200-day SMA on the weekly. And then of course our Gaussian channel upper line is sitting around 25,600, which doesn't really line up with a lot of resistances on the chart, which leaves me to believe that that level will be quite a weak level and most likely push through the Gaussian channel if we can push upwards here. Okay, let's go ahead and talk about some potential bearish structures that we do see on the chart over here. And, you know, I haven't really looked at this much actually. I'm just going to go ahead and draw some trend lines in and see what I can see. And we don't really have anything. We did have this rising channel formation over here, which obviously was a bearish structure. And you could argue that this is still to some degree intact, this rising channel formation. I would personally argue against it. I have always been more towards, or more inclined towards, believing that we did have this rising triangle formation over here with its upper rejection point. This was our neckline, we pushed through it, and we did have this downward descending channel over here that we faked out to the bottom from. This was a massive fake out, which we actually took entries on longs over here and pushed through. So again, guys, I could go on for hours about what's happening, but I really just think that's about it for the video. I think the best thing to do right now is to remain cautious, just remain patient. Don't be taking rational, or should I say irrational positions over here while the price is uncertain. If you're going to be doing that, just make sure you're very much aware of the risk. If you're going to be scalp trading here, just remember that if you're using high leverage, the volatility here is not really ideal for high leverage in the sense that it is more random. The price direction on the short term is more probable to head downwards. I do believe will most likely come back down. I think, 23,200, potentially even 22,800 is a target for Bitcoin. And of course, if we do lose this gray zone over here, this 22,800 level, we could see another nasty drop down for Bitcoin if that occurs, okay? And again, if we do break upwards here, well, we already know what's gonna happen. With that being said, guys, I'm gonna leave the video there. Head over to our Telegram channel, you got the link down below, Bitget, all that kind of stuff, become a trader, all that kind of stuff. Go ahead and contact me for that. Now, I do wanna say, guys, I'm gonna probably be taking a break from Twitter. I'm not a huge fan of Twitter anymore. I just believe this place has just gotten too toxic. When I started this channel, my main goal is to help people. My main goal is to spread, truth and factual information to help as many people as possible. And I believe that I've personally done that. I believe I've stuck true to my word throughout this entire market. I've always shared what I believe is the best and what I believe is the most, relevant information that I could possibly find. Yet, for some reason, I still have people, calling me out for shit they don't understand, like this fool over here, like telling me that, I flip-flop my views, and this guy's like, just, anyway, the fact of the matter is, guys, I think I'm pretty much going to be taking a break from Twitter. I might post, once a day or something, but my main focus is on YouTube and Telegram. So if you're interested, these are the places to follow me. I think Twitter is just full of keyboard warriors, a bunch of trolls, and people are just salty that they missed the top or missed the bottom, whatever it is. But, I don't have time for my life in that. I really have no interest in arguing with people on Twitter. I think it's immature and pathetic. And I think everyone who attacks other traders on Twitter, the real question is, where's your opinions? Where's your channel? What are you doing to help others? Instead of staying there and attacking people for actually being out here helping people. And regardless of someone's opinions or views, you shouldn't be attacking them. At the end of the day, everyone is entitled to their own opinions and views. If the person who is providing those opinions and views have legitimate data to support their claims, you have no right to attack that person because of it. And if you do, there's a reason why you're not going to make it in this space. It's because you're a clown, essentially, okay? So I'm gonna leave it there, guys, and I'll catch you in tomorrow's video. Okay, guys, we're gonna be taking a quick look at Bitget, and now Bitget is where I personally trade. I highly recommend signing up to Bitget with the link down below. Bitget is probably the best exchange out there if you are a trader. It has a variety of features, and the best things about Bitget are a few things. Number one, it's non-KYC. Well, KYC is completely optional on Bitget. Now, there's a whole variety of exchanges out there nowadays that have gone completely centralized, sharing your personal trading information and information of decentralized governments and different governing bodies. Bitget allows that option to be left to the individual, to the user of the exchange. You can decide to non-KYC, you can decide to KYC. It's completely your choice. Another really beneficial thing about Bitget, and the biggest reasons why I'm sitting here actually recommending Bitget to all my followers, is that it has 0.02% trading fees. All right, this is significantly lower than any other cryptocurrency trading exchange out there. FTX, Binance, can name a bunch more. KuCoin. It is significantly lower, by 500% lower than the lowest exchange out there, Binance. Another big thing, guys, is there's no global restrictions on who can use Bitget. Anyone from anywhere can sign up to Bitget and get access to the entire exchange of all the tools, whether it be futures or spot. No matter which country you're in, you can use futures and spot. If you're in America, for say, and you want to get access to more spot trading pairs, such as Binance Global, and you can't sign up, well, guess what? They've got 250 different spot trading pairs here on Bitget to get access to, and you can get access to all of these. If you're in Australia and you want to access the futures market and you can't trade futures, you can do it here on Bitget. You can get access to the future market and start trading with leverage. And finally, guys, if you do want to sign up to Bitget,
go ahead, click that link down below to sign to Bitget, and you'll get access to the reward center over here, which enables up to $4,000 in rewards by completing 5 tasks. Alright guys, we'll get back to the video. Thanks for listening to that. Okay guys, I want to take a quick moment to introduce the Become a Trader course at the end of this video. This course was designed by myself and Wolves of Crypto. We put together a whole variety of knowledge to create the most cohesive, understandable, and beneficial trading course there is on the market. If you're interested in learning how to become a trader, if you're interested in learning how to use technical analysis, if you're interested in learning how to apply market analysis to different cryptocurrencies, this is a course for you. We teach you everything from the fundamentals, the basics about what cryptocurrency is, how to trade cryptocurrency, mastering the craft of cryptocurrency, diving into a whole range of technical indicators, market structures, and teaching you how to utilize these when finding trades and applying risk management strategies to become more profitable over time. We even dive into market psychology, human psychology, and provide a variety of different videos and educational content, including courses and quizzes to assist your learning along the way. If this is something you're interested in, guys, go ahead and contact us down below at the cryptoacademycourses@gmail.com. We'll send you an email back with all the course information, the structure, the payment details, and everything else you need to know. That being said, guys, I hope you enjoyed the video today, and we'll catch you in the next one.